Welcome again to the next episode of Simplified. This is Fred Martinez, your host. Hey, today we're going to go back to school again. So we want to give you some basic accounting principles. So that's why I said we're going to go back to the basics. So the first thing we got to look at is, transactionally what's happening. So we're talking about balance sheet and a profit and loss statement or an income statement. These are the two main things that we use in accounting in order to give you guys the information that you need, or your banker, or if you want to see your profit and loss. And so this is all transactional in nature. So what I wanted to do though is to give you an idea of how everything is working. So then next week, when we actually go into your QuickBooks, we'll actually go in and we'll actually do these transactions, but we'll follow along. But at least now we have the basic idea of what's going on in the background, because that's real important, right? So let's get started with this. So the first thing I want to do is I want to look at, the first item here, and it's the sale of garlic. So we're going to sell $100 worth of garlic. So I'm going to go ahead and put $100. And I'm going to make an accounts receivable item right here for 100. Okay. And then the other side of this transaction, because accounting is a dual entry system. And so the next step is going to be to put the sale for the $100. So obviously the sale goes to my income, right? And my accounts receivable for $100 is, hey, this customer owes me $100. The next step is I'm going to sell jalapenos, but I'm going to sell those jalapenos for $200. So what am I going to do? Same thing. I'm going to go in here and I'm going to go ahead and make a $200 invoice for $200, and I'm going to take that $200 and I'm going to go ahead and show it so that it gives me another sale for the 200. So what does that mean now? Well, add it up. Income statement wise, I have sale for 102. So now my total sales on my profit and loss statement is going to be 300. My AR, I sold $100 and $200, right, worth of product in my AR, and they haven't paid me yet. So now my AR goes up, and now I show that people owe me money. Then what happens after that? Well, this is where the fun start begin, right? So we did the 100, but now, oh yeah, baby, now the money comes in. That's what's important, right? Because cash is king, the money king. All right. So now that we have the payment coming in, so now our customer comes in here and he says, hey, you know what? I'm going to go ahead and send you a check for the $100 to pay off that bill. All right, great. Give me my $100 check, right? So, but this is where it kind of gets a little bit, intricate in the sense of how it works. And it's this payments to deposit that QuickBooks has in their system. Payments to deposit just means that it's money sitting on my desk. That's the way I normally handle that. So I'm going to go ahead and show that I got $100 from a client. And I have $100 from the client. And then I'm going to go in and I'm going to then make a payment to that invoice for the $100. So what does that do? Well, now that eliminates, hey, there you go. That eliminates that $100 transaction. And it leaves this money sitting there saying, hey, it's going to the bank, right? And then the other client comes in and they give me a $200 check. So now I go 200. And I'm going to go ahead and show that, you know what? This is not working very well. So I'm going to put the $100 here. And I'm going to show the $200 here. And then I'm going to go ahead and show the $200 here. And I'm going to take this sucker off and I'll put the $100 right in here. All right. Make it real easy here. So now what happens is, well, now our accounts receivable is 0. So if we run a balance sheet, it's going to show that we have the AR at 0, right? But it's going to show that I have payments to deposit for $100 and $200. All right. So now that we've done that and that, so now what's the next thing we got to do? We got to physically take the checks to the bank, So now we go in and we actually do a deposit. Okay? And so by doing the deposit, now we're physically taking the $300 to the bank, and we're taking the money. Since we're taking the money to the bank, now that eliminates this. Payments to deposit goes to zero, and your bank has $300 sitting in the account. When you physically take it, the bank will deposit the money into the account. So when it's all said and done, this goes to zero, this goes to zero, and transactionally what happens is you have a $300 sale and a $300 going to the bank. That's the way that QuickBooks works in the background with doing the accounts receivable stuff. This is Fred Martinez with Fred Martinez LLC. Thanks for joining us on this new episode of Accounts Receivable. Make sure to subscribe. And if you have any questions, leave them in the comments below. We'll see you in the next episode of Simplified.